before we start, but people are asking if this uh, presentation is being recorded, and yes, it's being recorded. The recording will be made available. And of course, we do have the slide deck as well, so we'll make all that available to you. Alrighty. So I guess we can start.
Let's get rolling.
Yeah. Okay, hi everyone. Thank you for joining us today. This is a topic that we're very excited about. We'll be talking about women and wealth. One of the things that inspired this webinar is looking at statistics. Melanie and I love numbers, so we're always looking at how we can get better. We can give better advice using numbers. But some of the numbers are not really positive when we look at women and wealth. One of the things we were just talking about this earlier, that men are twice as likely to save 250,000 for their retirement than women. Can you imagine? And men don't make twice as much. Why are they more likely to save 250,000 towards their retirement than we are? So it's things like that where I'm thinking maybe sometimes as women, we sit back and watch instead of being in the action. So Melody and I are here to have that discussion and see how we can help. Because, Melody and I'd like to think we're at the forefront of our financial building, right? So we would like to have that conversation and see how we can help other women get at the forefront of wealth building. Okay, but a bit about me. This next slide, please. Okay. So my name is Jocelyn Nicholas, and I am a real estate broker, I'm licensed, and I've been in real estate for the last 12 years. For the most part, for the first 6 years, we were just investing in real estate. My husband and I, we would buy properties using our income, right? So some of the strategies we're talking about today is things that we've done ourselves, where we had corporate jobs. I used to work for the Ontario government as an economist, and I would use my income to buy properties. My background is economics. I went to McMaster University for my undergrad, and I did a master's in business economics at Laurier. And one of my specialties is specializing in student rentals and tenanted properties.
Next slide, please. So I am a realtor, a real estate investor. Jocelyn and I actually run an exciting real estate team called the Hive Real Estate Group. So we're co-founders as well. I do real estate coaching, but more importantly, I love to be a community builder. So in addition to Women for Women Investors, I also serve on a couple of boards. I love tapping into the community, but really before real estate, I spent over 17 years in the corporate world.
Wow.
And when it comes to the topic of building wealth, really, that's why I made the transition to real estate. And we're going to get into this a little later. But what I realized, and it took me over 17 years to realize this, wealth building isn't done through how much money you make. It's disciplined habits. And we're going to talk about that later, which I'm so excited about. But that's just a little bit about me. I am passionate about helping others figure out what it is they want to do with their lives. I'll talk about this at the end, but one of the things our team offers is vision meetings where, yes, we do get into what your financial goals are, but more importantly, where do you want to go? If money wasn't an issue, what would you want to do with your life? And so at the end, we will provide our Calendly link, and I would love to be able to sit across from you and just plan out your vision and your big why.
Absolutely. Next slide. Okay, so today we'll be looking at a few things. One of the things we're looking at is why women and wealth. Why is this topic important? And I guess for me, I've already said one of the reasons is statistics, looking at the data, that women are more likely to be found in poverty than men are. And truth is, there are cases where women make more, right? And even though men are doing better, they don't make twice as much as we do. So something is wrong here, and looking at how we can fix that. We want to look at the confidence gap. Why are women less likely to feel confident to invest in real estate, and what can we do about it? We'll look at some numbers. We'll look at the ownership mindset, right? Like Melody was just saying, income versus ownership. Those two are not the same. How can we take advantage of the one that will put us in a better situation? We'll look at why real estate. We'll look at some wealth strategies that women are using. We'll also look at case studies, and we'll look at some confidence boosting strategies and boundaries, and then we'll talk about next steps. And at the end of this whole thing, we'll do a Q&A. So like I said, it's really important that we know what you're thinking, what questions you have. So please put them in the chat box. We want to have a discussion.
Okay, why women need to think about wealth differently. Unfortunately, it is a reality. There are some things we need to factor in as we're thinking about our vision and our big why and wealth building. The reality is now, I think this is good news. Women live longer. It's just a fact. On average, 4 to 5 years. I think it's longer than that, though, but I mean, at least 4 to 5 years. Women are more likely to experience career interruptions. And I remember this in my own career, maternity leave. We tend to fall into the caregiver role as well, and family responsibilities. All of that factors in to our income earning opportunities as well. And unfortunately, the stats show women still earn less on average. So when you think about that and the compounding effect of income earning, that does result in a gap down the road when you look at it long term. Women are often responsible for major financial decisions later in life. So, what research has shown, this can show up in the form of divorce, widowhood, or just life changes. We
Yeah.
tend to bear a lot of those responsibilities on our shoulders as women. And all of this means financial confidence for us is not optional, it's
Yeah.
essential. And that's why you are all here today. So just give yourself a tap on the shoulder, on the back for showing up today. That's step one. Okay. So before we talk about building wealth and how we do it, we need to take a step back and start with clarity around where do we stand today, right? Oftentimes, especially when I do these vision meetings, people are ready to sprint, but the reality is we need to reflect on where we are today, where we're starting, so that we can map that plan of where you want to go. And so knowing your numbers really is step one in this process without fear. So don't worry if you're in debt. Don't worry if you feel like your income earning potential is not where you'd like it to be. This is just an honest reflection and exercise on where you are today. And
Mhm.
so net worth really is simple. It's what you own minus what you owe. So total assets minus total liabilities. Now, when we email out the slide deck, there is a link here you can click on, and it's a really handy fill in the blank worksheet so that you can figure out what your net worth snapshot is. And this is really important. It's something I would actually encourage you to do at the minimum once a year so that you are self-reflecting on the wealth that you're building. And because income tells you what you earn, net worth is actually what you're building, right? So it's really important that we track this. So the next piece of this is the cash flow awareness. And the way to think of cash flow is what's coming in and what's going out each month. Sounds
Yeah.
really simple, yet most of us have no idea. Money's just coming in, it's going out. We see a credit card charge, we don't know what it is. So it's gaining back control of your cash flow. And assets are things that increase your net worth. So we want to make sure that you're putting money in your pocket, and cash flow is one of those things we need to be tracking. But when you understand cash flow, more importantly, mentally, you feel in control as well. I would say this was my biggest sigh of relief when I started tracking my cash flow. It's a reality check of where you are today. And so you can start making decisions like how much can I actually save every month? How much can I invest? And where are those efficiencies or optimizations? So for us, I'll give you an example. we were eating out a lot. We were really busy. And when we were tracking our cash flow and our spend, we realized we were spending a crazy amount on eating out. So we needed to buckle down, meal prep, do all those things so that
Yeah,
we end up with more money in our pocket to invest in the things that are actually going to pay us back. And then the final mindset shift is the difference between assets and liabilities. So assets are things that increase in value over time, and liabilities are things that will depreciate. So taking money out of your pocket. One example I like to use, and I was telling Jocelyn this earlier, is the Amazon, like just trinkets and gadgets and all those cool things.
yeah,
And when I see those reels for Amazon items in your home, it's so tempting. Those are prime examples of liabilities. Most of those things are not going to be appreciating or paying you back down the road. But the key insight here is that not all debt is bad debt. So there is strategic debt, which Jocelyn's going to talk about later, like a mortgage on appreciating property. So yes, it is a debt, but it's actually a really powerful wealth building tool if it's done properly. So the goal isn't just to earn money, it's to shift towards acquiring assets that grow your net worth over time.
absolutely.
Okay, next slide. So now that we high level understand net worth, cash flow, and the difference between assets and liabilities, let's talk about the next big mindset shift. And that really is the spender saver mindset to owner investor mindset. Most people think that wealth building is just about budgeting, right? Tracking your budget, cutting back, saving, saving, saving. And although all of those things are good things, I'm not denying it. The reality is wealth grows when your money starts working for you, right? While you're sleeping. That's the best feeling ever.
Yeah,
So, not the other way around. And that's what ownership is all about. So let's start with the difference between consuming and owning. So, consuming, think of it as spending money for immediate satisfaction, like those Amazon purchases.
yeah.
I mean, it feels good, but again, the reality is most of those things will not be earning you money while you're sleeping. It feels good in the moment, but again, remind yourself it's not growing your net worth. Owning, on the other hand, is acquiring assets that generate value, income, or equity over time.
Yeah,
So, a great example here is buying a rental property instead of renting, or investing in stocks instead of spending things that depreciate. So, that really is the mindset shift that changes the trajectory of your finances.
yeah,
And so here's why ownership changes everything. It builds long-term wealth. It creates financial flexibility and freedom. It creates security. It gives you leverage. And assets can fund future opportunities. So, an example, if your kids are off and wanting to go to university abroad, if you have appreciating assets, you're able to fund those dreams for your family as well. So, your
absolutely.
perspective shift here, most people are thinking, how much money can I make? That's like a very, very common mindset. We want you to start thinking about how much money, how much of my money makes for me, right? What is your money? How hard is it working for you? And then finally, money confidence versus money knowledge. So I think a lot of us fall in the bucket of knowing financial terms that are useful and having a baseline understanding of some of these terms and how things work. But I find a lot of people don't have clarity, and that's where money confidence really comes in. And clarity starts with knowing exactly where you stand. So that's why I would say if there's one thing you do at the end of today, at some point this week, do the net worth exercise, figure out where you're standing today. Um, and the other thing I would say is read, listen to
Yeah,
audiobooks, um, go to on webinars like this one. There's amazing, amazing resources out there to self-educate yourself. And more importantly, don't feel you need a six-figure plus income to build wealth. We
yes,
have worked with so many clients who are making amazing money, amazing incomes, and are not in a great financial situation. And on the
yeah,
flip side, we've worked with clients who aren't making that much money, but my goodness, they are doing all the right things.
Yeah. Melody, if I can add one thing too, when it comes to confidence, I feel like confidence also comes from doing and proving to yourself that you can do
Mhm.
it. Because we've become so confident over the years, just simply because we've done the things. We've bought that first property or we've bought our first home. And now that we were homeowners, sorry, English is not my first language. Sometimes my words go fast. But anyway, now that we've been homeowners, we know what that is about, right?
Yeah.
And even though people can talk about, oh, being a homeowner is difficult. I've heard a lot of people bring up problems of home ownership, but because I've been through it, I have the confidence to respond to that or to not even listen because we don't listen to everyone. That's one of the things
Hmm.
that Melody and I was discussing earlier. We have to be careful who we listen to, right?
Yeah.
And confidence, all that to say, confidence also comes from doing. We know people, even some of my clients who've been sitting on the sideline waiting for the market to drop for 10 years. And now the market has corrected and they're still waiting. Now, if we
Yeah.
compare our confidence levels, where are we, right?
You
So,
know, and it's a good point. I think back to my own journey. I actually bought my first investment property during COVID, and
yeah,
I had so many people tell me that's such a bad idea, including my own parents. And I'm so happy I did it because when you focus on the systems and listening to people who've done it at a successful level
yeah.
and you know your numbers, that first property we bought now has $250,000 in equity.
Wow.
I am so happy I
Yeah,
bought it,
yeah,
even though it was a bad market to buy.
yeah. And truth be told, you can find deals in any market, right? So in today's market, our criteria for looking at deals is different from what we could have used back then in COVID. But truth be told, I think when we look at the trend of where real estate is going over time, the trend is upwards. There might be fluctuations here and there. And the strategies we're talking about is long-term hold. So if you're looking to hold long-term, right now is such a great time to buy because the prices have corrected.
That and just the ability to negotiate, and
Yeah,
sellers are so flexible right now, and it's just a wonderful time to get all the things you need to get to make that deal make sense.
yeah, absolutely.
Okay, next slide. Okay, so this is more of a self-reflection question, and I want you to honestly ask yourselves, do you currently track your net worth? And do you feel confident making investment decisions? And if it's no and no, that's okay. That's why you're here today. We're going to
But the
help you with that.
awareness that comes from it too, right? Because sometimes all it takes is the awareness to know that this is something I should be doing that I'm not doing.
That's right. That's right. Okay, next slide. All right. So now that we understand owner investor mindset, let's see how it actually shows up in real life. So we pulled some stats. And really, there's a powerful mindset shift when it comes to money. And really, we're focusing here at the beginning because before we talk about case study and numbers, we want to make sure you're in the right headspace before we delve into that.
Yeah.
Most people, we already said this before, track their income, right? Wealthy people track their net worth. And because you can earn a great salary and still not build wealth, I am telling you, I saw it in the corporate world all the time. If everything you make is going out the back door, what's the point? Why are
Yeah.
you busting your butt? Why are you focused on earning that next income earning goal for yourself? It's not about how much you make, it's about what you do with the money that you make.
Yeah.
And right now, unfortunately, the reality is 7 out of 10 Canadians are struggling with debt. 7 out of 10, 70% are
Yeah.
struggling with debt. And so it's not, like I said, about earning more. It's about building systems that can help you grow your money. Now, here's something really important that often surprises people. About 80% of millionaires did not inherit their money. Most of them are self-made,
Yeah.
right? And I think there's a myth out there or narrative that we tell ourselves that things were handed to them.
Yeah.
or that they had it easy. They were self-made. And
Yeah.
here's another thing that was really interesting. When researchers looked at who these millionaires actually are, guess what they found? They're not celebrities, they're not Fortune 500 CEOs, they're not startup founders. They're teachers, they're
Yeah.
accountants, they're engineers, they're managers, they're lawyers. And the one thing all of these professions have in common is they're people in system-driven careers,
That's true.
right? Which tells us something important. It's not about the income that creates wealth, it's about the system. And really, that's what I want you to start thinking about. What is that system you need to start implementing to start building wealth? And the fact is, 3 out of the 4 millionaires, they invest regularly, right? Not occasionally, not when the market feels right. They're doing it consistently. This also tells us that they tend to have surprisingly simple habits, like super
Yeah.
simple. For example, the grocery list. They're very intentional with their spending. They have their list, they know what they want to buy. They do not go outside of that list. And they do that in all aspects of their lives. The other thing is you don't have to be super smart. Most of them graduated from public school.
Yeah.
Some of them went to college, right? You don't need an Ivy League degree to build wealth. And when we look at where their wealth actually sits, about 60% of their net worth is in their home. It is one of the easiest ways to build wealth. So,
Yeah.
this really shows us how powerful ownership can be in building long term wealth. So, the takeaway here isn't you need massive income or special access or privileges. It's that wealth is built through consistent habits,
Yeah.
smart systems, and ownership.
Yeah.
That simple.
And that everyday people are doing it. Everyday people, right? And sometimes too, when we look at clients, they've never had such a high income. In fact, some of one of the because we drove deeper into this study. One thing that came up over and over again is that only a third of these millionaires made over 100,000 in their in per year in the course of their career. So these are people who are making less than 100,000, majority of them, and yet they have habits and systems in place to build wealth over time.
Hmm.
Another thing too that I learned from this study is that building wealth is not like a get rich quick thing, right? Like those things, or you just do this one, then before you know it, you're a That's not how
No.
it works. It's small steps over time. And one of the things that stood out to me in the study is that it took about 10 years for most of these people to go from like zero to $1 million.
Yeah.
And majority of them have a lot of equity in their home or their home is paid off. Like they are actually using real estate to build their wealth. I thought that
Hmm.
that was something that surprised me. The um, top two buckets for how they built their wealth was real estate and investing in their retirement accounts.
Yeah.
Yeah.
Next slide.
Okay, so we're gonna look at real estate. I guess at this point, you know why real estate. And the truth is, if you look around, all the high net worth individuals, they own real estate. Those who don't own real estate are probably like a small percentage, you know? But majority of them, their money is sitting in real estate. And why real estate? We're talking about leveraging the bank's money. Many of you know that when you buy a property, you have to give a down payment. For an investment property is 20%. If it's your first home, you can go as low as 5%. So for 5%, for example, you can buy a property and the bank will give you 95% of the purchase price. So if properties are appreciating, let's say on average in Canada is about, 5 to 10% per year, that's 10% on the whole purchase price. But you've only invested 5%. So if we look at return on your investment, it's so high, we can't even compare to any other asset. In addition to the appreciation, oh, in addition to the appreciation, you're getting cash flow. And a lot of people will say, oh, properties don't cash flow anymore. It's because you're not looking at the right properties. You need to connect with people who are doing it every day so we can actually show you the kind of properties we're investing in that are cash flowing. You get tax advantages. Melody, were you going to say
Well,
something?
I was just going to say this is such an important point, cash flow. I remember when we were buying our first investment property, our goal wasn't to just break even. It was to make sure we had a buffer in tough markets too. And
Absolutely.
again, because you're coming in as an investor, you're removing that emotion and it really is just focusing on the numbers. So if the right number doesn't come together, you can't negotiate that right purchase price, move on. There's so much
Exactly.
inventory. Even during COVID, there
Yeah.
was lots of options.
Yeah, absolutely. And one thing that we always talk about with our investor clients is we need to make money the day we buy the property. Many people are surprised to see that we buy properties at like 80% of market value. So if something is worth 1 million, we're picking it up for 8 or 850, around there. Why? Because we are investors. We don't buy properties on market value. We want to buy at wholesale prices, which is under market value. So those are also things because I've seen people be like, oh, but I love this home. It's cute. It has the right colors. Yeah, the numbers aren't working. Let's move on.
Yeah, you're not living there. The numbers have
No,
to
no,
make
no, no,
sense.
no, right? And of course, it's good if it's nice and has all those things, but the numbers have to work first,
Mhm.
right? Not only that, you're saving money through mortgage pay down. We talked about systems that automatically force you to save. Like this is one of those things that if you structure it correctly, you have your cash flow coming in. Over the next 30, maybe even sometimes 25 years if you're aggressive, you'll have this asset that's worth more than you paid for it, and it's paid off. And guess what? It's still generating income. Still generating.
And I just want to add, like, just going back to like that first investment property I bought, I can't imagine saving 250,000 in the course of 5 years if I was left to my own whims,
Yeah.
right? Like it just wouldn't happen. But
It,
because I'm forced, forced to save,
yeah,
it creates that discipline. And you know what? You're paying yourself first. That's the
absolutely.
important thing.
Yeah. Oh, absolutely. And I can speak to even our first investment properties. By the way, I came to Canada about 15 years ago, and I came as a student, so I didn't really have much. And over the course of the last 15 years through real estate, my husband and I have built, right? And we started buying properties while I was still a student. I wasn't even graduated yet. We would use his income. Then I graduated. First thing I did, paid off all my debt. And then we started buying properties slowly, one at a time. When you're looking at it today, it might feel or sound intimidating. Like, how do I get to that many properties? You don't need to. You just need the first one,
Hmm.
then a second one, then
Hmm.
a third one. And if you have the right professionals in place, we'll help you, support you, coach you, connect you with some of our people, such that when we're looking 10 to 15 years from now, you can actually achieve your goals. And if you do your visioning like we talked about, we can envision that and then see you achieve your goals and visions over the next few years. Next slide. So, some of the wealth strategies we're talking about. One of the first moves, if you're somebody here who's still renting, we would like to work with you, help you, talk about how you can get into your first home. Because we've already looked at millionaires, most of them, their equity is sitting in their home, which means I've heard the argument about, oh, if you rent, then you don't have to worry about home ownership. Let me tell you something. I'm a landlord. I know my tenants pay for everything it costs me to run that property. Be it the maintenance, the insurance, the taxes. When I run my numbers, all those things are bundled into the rent. So if you're somebody who's paying rent right now, there's no way around. Like you can't say that, oh, I can just pay to avoid all these expenses. You're just paying for them. You don't know. And in addition to that, you're paying down my mortgage over time. And I hate to say this because it sounds a little bit harsh, but it's the truth, right? I think
Yeah.
part of being women and sisters in this life, the life we're walking, is telling each other the truth. I've heard the argument of rent because truth is you're still paying for those things, but they're going to my bottom line or other landlord's bottom line,
Yeah.
right? So step number one being buying your primary residence. Step number two is house hacking. House hacking is where you buy a property that has multiple units or multiple apartments. In this, the most common one in Ontario is buying a property that has a basement apartment, living in the basement apartment while somebody else pays for your expenses. So
Hmm.
basically, they call it house hacking because you have a place to live, but you're not really paying for it because the tenant who's upstairs in your property is covering their rent covers your mortgage, your insurance, your maintenance, your taxes, everything is covered. So that's what we call house hacking. Therefore, when you house hack, it allows you to save more over time to be able to buy your second one. We lived in someone's basement while, so a version of house hacking that we did, my husband and I, we had a property in Toronto that was rented out, both upstairs and downstairs. And we went and found the cheapest basement because we didn't have kids, so it didn't matter. So we found the cheapest basement we could find. We just lived there for $600 a month, and our property was growing. Everything we were making, we were using it to build our wealth over time. So then when we had our first baby on the way, we had saved enough to buy our own home that we can also move into. And even then, we had a basement apartment, and the person in the basement was paying for half our mortgage. And like Melody was saying, it's not about how much you're making, because in that time, I wasn't making that much. I was just a new graduate. So it wasn't how much I was making, it's how much we were keeping by using all these strategies.
Hmm.
And then of course buying smarter, not bigger. We always want to run our numbers, make sure that whatever property we're buying fits into that vision that we talked about. Numbers are the most important thing as an investor because you're investing to get a return on investment, and we're very aware of that and we'll help you reach there.
And something here is it could just be little sacrifices here and there. When we bought our home, it was our second home, we always envisioned we'd upsize
Yeah.
once more, right? So we bought our first home, we upsized a little on our second home, and then like the final upsize.
Yeah.
And we decided the more we thought about it, it just doesn't make sense.
Yeah.
Sure, we didn't have that fourth bedroom or the pool we wanted, or, like all the little things, but was it really important? Or was our long-term vision of being able to retire comfortably and
Yeah.
spend half of our year traveling more important? So that's why I say when we talk about planning, it's so important to be clear on your vision and your big why and what is that lifestyle that you're building.
Yeah. I love that. And while you're speaking, Melody, something just occurred to me that we're both women who also are married, but we're so involved at the forefront of wealth building. So I know there are women here who are saying my husband will never agree to this. You know what? Truth is, we as women, we don't give ourselves enough credit for how much we can help our husbands come to a
Mhm.
decision, right? And I believe that both parties have to be on the same page for you to make a successful move. So I'm not saying we should rebel or anything or try to cause trouble in marriages. But I'm saying, as a woman, if we're aware and we show them and we explain these things to our husbands, these are things that are bringing your household forward, not backwards. So just the awareness and knowing the amount of power we have to be able to drive decisions and driving the right ones. So just wanted to say that.
Good point.
So some of the properties that our clients are buying right now, we're looking at some duplexes and triplexes. I told you guys one of our favorite things is seeing cash flow. And right now in today's market, with rates where they are and all the expenses that we have to worry about as landlords, single family homes aren't going to give you the cash flow that you need. So we're encouraging a lot of investors to look at multiple unit properties. Uh, for someone who's just starting, we're talking duplexes, triplexes, as well as student rentals. I feel like student rentals is one of those hidden things that people don't know about until someone shows you the numbers. But I looked at a property today in Guelph that's generating almost $7,000 per month. And that's with the students that are there now. The students are moving out, but they pay rents like 3 years ago rents. So if those students move out, you clean up the property and realize it has 8 bedrooms. On average, right now, Guelph bedrooms for student rentals are about $1,000. Conservatively, if we even did 950, you'll see that that property will be bringing in more than $8,000 a month plus utilities.
Mhm. That's
So that's the
incredible.
beauty of student rentals. But you have to be very careful with student rentals. That's something that we can talk about in a separate conversation because you have to make sure you get the right property in the right neighborhood at the right time. That's a conversation we should have. Don't just jump into them. I think most some of these strategies, just make sure, and I'm gonna say too here that if you're gonna buy real estate, buy with investor focused agents, a team
Yes.
like ours that's working with investors on a regular basis. Because I've seen agents say, and by the way, one of the reasons why I got my license as an investor is because I had such a bad realtor. I have to say it. A realtor who didn't understand my numbers, who did not relate to what I need to make the deal work. So because of that, I know that not every realtor out there is good. So make sure you're working with somebody who can guide you properly because a very small thing can become big when it comes to investing. And also when we're talking about real estate, we're talking about so many zeros. So a small
Mhm.
mistake with a lot of zeros behind it is still a big mistake. Okay, so busy professionals. A lot of women right now, we have busy careers, we have a family to run, we're busy. So there are options for people like that. One of them is to buy turnkey investments. And some of those basically include if you buy one of the student rentals or duplex or triplex properties that are move-in ready. And we do have professionals in place where we can connect you with them and they can manage the properties for you. And with property management, you also have to be very careful. But we have a few that we've properly vetted who will take very good care of your property, very good relationship with your tenants, such that over time you have a productive relationship and you have the return that we're talking about. Another option is to do joint ventures. Now, with joint ventures, again, you have to be very careful. Over the last few years, we've seen some interesting things where like someone is doing 100 JVs a year. Like if you have 100 joint ventures per year, how do you manage all of them? Then they have
Mhm.
management problems. So when you're doing some of these things, like I said, always consult with someone who knows what they're talking about and who can foresee some of those challenges and be able to guide you through it. Another one is to, partner with people who can bring something to the table that you don't have. For example, if you have a relative who has more time, you don't have time, you could partner with them and the relative will manage it for you. Um, and you can still achieve your goals without putting in as much time. However, if you have the time, one of the ways is also manage it yourself, which is something that we are doing ourselves. We're managing our own properties.
Mhm.
Next. So, building financial confidence, like we said earlier, there are a few things we can put in place to help us do that. One of them is breaking generational patterns. Most of us come from families that don't have all the bells and whistles. In fact, I'm thinking about the millionaire study that we talked about earlier. They also looked at that and they found that more than half, like the majority, came from less than middle income families. So we're not coming from families that have all the wealth. Therefore, for me, one of the things I was thinking, I was like, I want to change that for my kids. And I said, if I can't challenge myself to do more, how would I expect them to do more? So being that first generation to learn about how to invest, that first generation of women who know about their finances, that's what we're talking about. And then, of course, learning to negotiate without guilt. And this comes with understanding what you want, what you're looking for. And then when you're negotiating, I talk about this with my clients all the time. Let's understand what we're looking for and go get it. So if you find a cute little property by the water with all the bells and whistles, but it doesn't fit the picture, we need to have the emotional intelligence to walk away from that, knowing that this doesn't serve, like it might serve your, excitement needs, but it doesn't really serve your bottom line. So being able to walk away from situations like that and sticking to the criteria and the vision that we have long term. And then of course, charging what you're worth. I know a lot of professionals in the industry, a lot of women who aren't really, um, you know, charging what they're worth. For example, like if you're self-employed or even at work, this also goes to
Mhm.
work too, making sure that you're doing your own professional development in your career, making sure that you are getting what you deserve as women. And of course, having money conversation in relationships. This one is very important. I've heard of cultures where money discussion is a bad thing, or it's rude, or it's negative.
Mhm.
I think that in relationships, we should be able to sit down and talk about money. One of the wake-up calls I got, I used to have a teacher in high school who was a very successful teacher, but his wife was not working and she was just home. And she was not very involved in decision making when it comes to finances. One time, the teacher passed away. And I was a very young girl at this point. Like, I don't even understand what money is or like how these things work. But I remember that the teacher passed away and his wife had to take over finances. And I was close with the wife, and she would talk about how hard it is for her to fill the boots of the husband because she didn't understand what the finances or like how to pay a mortgage or those things. Like she was just so far behind that she couldn't fill those boots and she was struggling. At the end of the day, they moved. I don't know why they moved because I was just a kid. They probably wouldn't explain that to me. But I know that that was one of the first things at a very young age where I decided, I need to be involved in these decisions. We need to have, financial conversation in a relationship. Because if you're not talking about it, first of all, you don't know what's going on. Sometimes husbands might make decisions that are not good for us. And we're like quietly going with it without knowing. So I would even go as far as saying it's a very healthy thing for relationship to talk about money. So us as women, and sometimes it's our fault too as women, right? We're busy, we're running the household, maybe we're, dealing with the kids, and then we just give up the responsibility of managing our finances. So I think if maybe one thing could come out of this conversation is to say, let's not give up on our own responsibility of making sure that our families are going in the right direction financially.
Mm-hmm. And when we send out the slide deck, we'll send out the link that has different tools and templates, really simple ones to use. It can even be a monthly, just money or finance check-in with your partner
Mm.
and just tracking, what did we spend? What did we earn? What are our opportunities? Where
Yeah,
can we be buckling down and maybe saving or investing more? Because really the goal is to pay yourself first. One of the things we started doing is when our paychecks come in, they go straight, a certain amount goes straight to our savings.
yeah,
Paying yourself first.
absolutely. Next. So, what would financial freedom actually change in your life? If we were to take a minute and think about financial freedom, how?
Another way to think of this, oh, sorry, Jocelyn, is if money wasn't an issue, like you don't have to worry about it, what would your life look like? What would you be doing with your life?
Next slide. So here's one of the case studies. We have a deal example of some of the deals that we talk about when we're talking to our clients. So this is an actual property and it is available for sale. So if anyone at the end of this decides that they want more information, please let us know. And it's a two-story building and it has another floor in the basement. And it's a purpose-built triplex. What that means is it has three separate units, and with that comes a total of six parking spots. So we're gonna analyze this deal just to show you how we think about the numbers. And when we're looking at deals, what are we thinking about? So we've already been looking at this property. Next slide, please. And right now, I do believe deep down that the seller would accept a purchase price lower than 750. But for argument's sake, let's say 750 as a purchase price, worst case scenario. And the picture you see here, you see that it's a separate metered property. So it was purposely built to have three units. And then the fourth meter you're seeing, that's for the common areas. So that's a good thing because as a landlord, then you can have each tenant pay for their own separate utilities, and then you can pay for the common areas, things like, the foyer and things like that. So at a purchase price of 750, your down payment will be approximately 150 because if you're buying an investment property, you need to pay 20% down payment. And with that, we've made assumptions here just to calculate what the monthly mortgage would be. We're assuming a 4%, 4.35% interest, 30-year amortization, and there your mortgage payment would be 2,987. And of course, your gross rental income, we've looked at all the numbers. You would be getting approximately $5,000 per month. So the three units are bringing in about 5,000 a month right now. And I also wanted to mention that it's just vacant. So the tenants that were in there are just moving out. So I'm using rents from previous tenants, which means you do have an opportunity to also increase those rents slightly. And the fact that it's vacant is a good thing because you get to choose your tenants. It's really rare to find triplexes in this price point, and not only that, to find triplexes that are vacant, because a lot of triplexes in this market are properties that have been rented for years. So sometimes the rents are really low, but this is an opportunity for someone to set their own rents, and then select their own tenants. So annually, you're bringing in about $60,000. And expenses, we've done some calculations. It ends up being about 950, 909, 900, $995 per month in cash flow. So you can see all the numbers there. We run the cap rate. The cap rate is about 6.37, and the cash and cash return is about 7.96, or almost 8%. So this is a good investment. So when we're talking about investing and looking for cash flow, this is one of those things. By the way, comparable properties right now are selling around 900. And even if you search, you won't find those numbers. But I sometimes we know of deals and properties because we talk to so many people. So we know motivations, we know where things hurt, and we know where we can get good deals. So we have a lot of these deals in the pipeline. This is just one of the examples of being able to pick up a triplex in Southern Ontario for 750, and
Probably
therefore
under
having.
750, which is like crazy. That's
I know, and
crazy.
even duplexes aren't selling for
No.
750, right? So this is just an example. And I have to say that this property is available today. It's not like something that I'm saying this was available years ago. I'm talking about today, right? And also I use it as an example to show that if you know our markets, you know that similar properties are selling close to 900, right? And they're not vacant. And I know they have really low rents because I've analyzed a lot of them. So these are some of those opportunities that we have that our clients can access. And in most cases, most of our clients will definitely get properties that are cash flowing, even in a market like today, where people are saying things aren't cash flowing anymore. So that's one of the examples. Next slide. So some photos, the property is also renovated, as you can see. These are real photos from the property. Of course, because it was just rented out, it does, show like a rental property. So if like it's not like high end or anything, but it's practical and it's clean and it's ready to go. So that was our presentation. Now we can dive deeper into the questions. If
We
anyone has any questions, please put them in the chat box if you haven't done so already. Otherwise, we'll just start with some of the questions that were submitted ahead of time.
we do have a question from Patty. I just want to let you guys know, so I'll read it out. Can everyone hear me? Yeah?
Yeah, we can.
Okay, perfect. So Patty has a question. She said, how can someone create a realistic financial plan when their income varies month to month? And
Hmm.
thank you so much, Patty, for your question.
Yeah, that is really, really good. So your income varies month to month. That's like our income, right? Our income varies.
We feel you.
Right? So one of the things is just the awareness that your income varies month to month, which means for us, I will tell you what we've done. One is having reserves. So even though your income fluctuates every month, I would say maybe build up your reserves so that at least you're 3 months out, right? Second thing is, even though your income fluctuates month to month, you need to understand and spend within, like having a budget, I think is what I would say, such that your budget is lower than your monthly. And it also depends on how much it varies. Like for example, for me, some months I don't even get paid anything if I don't work. But if I work hard the next month, I get paid 3 months later, right? Because things
Hmm.
take a while to close. So because of that, I know what my budget is. We have reserves. We can last a couple months, maybe even a year without getting paid. So long as you have reserves and you're spending within your limits. And at the end of the day, too, you can look historically to see what your yearly income is. If your yearly income is, for example, lack of a better number, is 50,000, then don't live a lifestyle of somebody who makes 100K, right?
Mm-hmm.
So you're living within your means, you have reserves, and if it's something you can't control, then just having those two things in place and then making a plan based on your income, I think that should do it. What do you think, Melody?
Yeah, I was gonna pop something in the chat, Annie. I don't think everyone can see it, but I'll put it to you and maybe you can pop it in the chat.
Yeah.
It's they're free budgeting and financing tools.
Yeah.
And in there is one for irregular income. And so, in addition to what Jocelyn said, tracking becomes really important. I'm not sure what kind line of work you're in. For us realtors, we have an idea of what's coming up and what's closing. Our goal is to always make sure we're generating at least a minimum income. And really, that awareness comes from tracking. So, I would say step one, start tracking. Build a reserve, ideally minimum 6 months of reserve, so you have a cushion, a fallback as well. And then once you start tracking, you're going to see those patterns, right? So even though it may feel like a roller coaster, I would say if there's a way to build in some consistency in your business through systems, and again, I'm happy to connect with you. I
Yeah.
do coach entrepreneurs and realtors on how to get off the roller coaster and build consistency with their income. And then also understanding, do you have highs and lows in your season as well, right? So for us, we know spring, summer is where we earn the bulk of our income, and fall, winter tends to be slower. So we need to plan accordingly with our finances.
Yeah. Another thing you can do too is, for example, for us, like if you're a self-employed individual, your business income varies, but if you're an employee of the company, your income shouldn't vary, right? You can say, for example, the company can bring in, let's say, 10,000 in January, zero in February, but the company has the funds to be able to pay you regularly for a few months, right?
Mhm.
So just being able to separate ourselves from our businesses, like for example, if you're a realtor or somebody, or even one of those self-employed professions where you have a corporation that's doing all the activities and you're an employee of the corporation, your income should not vary that much if you are systematized like that, where the income of the corporation varies, but the corporation has a bank account and it has reserves to pay you regularly on a monthly basis for a while.
So yeah, that just reminded me of another important factor. Connect with an accountant
Right.
who is specializing in working with independent contractors and entrepreneurs and business owners,
Yeah,
because they have some really, really cool ways you can, structure your finances.
that's correct.
We have one question that was submitted as well. Can I realistically buy a home on a single income?
It depends on what the single income is. People are doing it. And
Hmm.
right now, prices have gone so low, like they've gone down, that even the low pre-approvals are getting properties, right? I have a client who bought something for 300,000 about a month ago. 300,000,
Yeah.
right, in Guelph. So I'm not gonna say no just because single income can be, it can be 30,000, it can also be 300,000. So I'm not gonna say no. I'd say book a consultation with us and we'll connect you with the right people who can give you a pre-approval.
And if for some reason your pre-approval doesn't come back the way you were hoping,
Yeah,
it doesn't stop there. We'll put a plan in place to make sure you get there.
absolutely.
And then one more question here. How can I pay off my mortgage faster and become debt-free sooner?
That is the wonderful question. I am very passionate about that.
Yes, you are.
I'm very passionate about building wealth, and I feel like one of the ways too is to get rid of debt. So I like that you asked about getting rid of debt. I personally do not like credit cards, so I don't have a credit card. And people are like, "How do you live?" And truth is, you can live on Visa debit, right? Like it's a debit card, can still shop online. But anyway, that's extreme. I'm not saying everybody should be like me, but I'm saying let's get out of debt. Why am I so passionate about this? Melody shared a statistic earlier. 7 out of 10 Canadian. That's 70%. So in a room of 10 people, 7 are struggling financially. 7 are struggling with debt. If this was such a good thing for us, 7 out of 10 of us wouldn't be struggling. So that's where my passion comes from. So yeah, absolutely get rid of credit card debt. I don't even like car loans. So I don't have one either. And the reason for that is when you buy a car, I feel like when you get it on, and I've done it. So I'm not saying I haven't done it. I am preaching to the choir. I've been through that of like pay off everything and get out. So I'm not saying like I haven't done it. But the thing is, I find when you buy a car on a loan, you're buying a depreciating asset. And a
Mhm.
lot of the times you pay a little more than you would have paid if you're buying cash. So in the end, you have like, let's say a bill of like, I don't know, 50,000 that you have to pay over time. And therefore that takes away from your ability to invest. So I would say buy a car cash. If you're already in one, do the best you can to pay it off. How can you do it? One of the ways, like Melody said, tracking the awareness of knowing where your money is going. One of the tools that Melody shared is an app or like a desktop version of it available in Canada called Every Dollar. And the concept behind it is tracking every single one of your dollars to know where it's coming. And when I started doing that, I saw subscriptions I wasn't even using. Can you imagine like subscriptions, like so many? I feel like life has become like subscription based. And we have like you need it once or you take it as a free trial and then you keep it. You're not even using it. Or you have Netflix or you have like all these 10 different subscriptions and you're only using one. So the awareness of tracking every dollar and now once you cancel all those things, taking that money, putting towards all your debts. Once you've paid all your debt, now you come to your mortgage and be aggressive on that too.
There's probably money there to uncover. In the corporate world, we used to call it turning over rocks, right? So
Yeah,
every month we would meet
yeah,
and then we would figure out what are those rocks we can turn over and cost
yeah,
saving opportunities and then put them towards things that benefit the company. The same applies to your debt as well. So the subscriptions, like honestly, go through your credit card statements, go through your bank account statements. There's so many little rocks you can be turning
yeah,
over and then calculate what that equates to and then have it auto deposit into a savings or to your mortgage to pay it down faster. And you're not even going to feel the pain because
yeah.
it's not like you have to go make more money. You're just allocating it to something that's going to benefit you.
Yeah. And one of the things that I saw when I started tracking Melody that made me so upset, I was ready to change my life, was bank fees and interest. I'd like to challenge everyone here to go look into how much you're paying per month in bank fees and interest. For me, because like I said, we had a car loan, I had a few credit cards. Every month, something like maybe $1,000 going to, can you imagine now that I don't have it? I have $1,000 that I can invest or I can just enjoy, right? So once you start to see those things, another thing that I did that drove me crazy, I looked into if I pay my home over 30 years, how much interest will I pay? Double. Like what your purchase price is, multiply that by two is what you're gonna end up giving to the bank, right? And to think that you have to earn that income, pay taxes on it, then give it to the bank. So I like that question, and it can be done, and people are doing it. And I'm hoping that in the next 2 years I won't have a mortgage, hopefully. Okay, should we look at other questions? Any other questions that are live? But we're almost at the time. Like literally, we have three
Mhm,
more minutes. Let me find one
mhm,
question that we can answer. But this has been a good discussion. Let me
I
see.
have a personal question.
Okay.
mhm.
So, what's safer for me to do? Is it better to invest in real estate or stocks or other investments? What do you think in this market?
Annie, truth be told, I think if I was to pick one for you, I'd say real estate right now. Why? Prices are at their lowest in the last like 10 years, right? Like things have gone so down, there's definitely room for them to come back up. Not only that, in addition to how far prices have gone down, we have a lot of motivated sellers. Lots and lots of motivated sellers, where even compared to today's market value, we can get the property for much less. So like the triplex we were showing, that is worth probably about 900. Imagine, and I have a feeling that we can get it for like seven, right? Where else will you get 100,000 overnight? Very rare, right?
Yeah.
So I would say, and also it depends too, right? Like if someone is still saving up for down payment, we understand that's something that we can even support you. Maybe you can put in the stock market while you save for down payment. But if you have the down payment as little as 5% of the purchase price, you can absolutely get in this market. It's the best time, especially for first-time home buyers right now.
It is.
Yeah.
Yeah.
Melody, what
Um,
do you think?
I think we have
Yeah,
a
I
few more
mean,
questions
it's
too.
not because I have a bias. It's just that real estate investing is such an incredible wealth building tool and really doesn't require a lot of your time. And like Jocelyn, we
Yeah.
manage our own properties. And if you do your due diligence in finding the right tenants, you find the right property, it's cash flowing. It's almost like a set it and forget it. I don't want to say completely passive because there is a little bit of work involved,
Yeah.
but it's a wonderful way to build wealth. So I would highly recommend if you're renting, you go buy that first home. If you have a primary home, pull out some of that equity and go buy an investment property that makes sense for you. In terms of what type of investment property, that's where we would need to sit down with you and really
Yeah.
understand what your goals are, but also who you are. Like some investors really want turnkey, nothing to do with it. We're going to have different recommendations for the investor maybe who wants to put a bit of sweat equity into it.
Absolutely.
We have one more question. I just want to make sure we don't
Sure.
miss this question from Donica. Are there certain areas that is better for rental properties or student rentals?
So in my opinion, so that's two parts question. Like one is areas better for investing, and second is student rentals. The first part, I think it also depends on where you live and if you're gonna self-manage. What I like to say is if you're self-managing a property, you want it to be at least within an hour drive. So if you're someone from this area or someone from Toronto, you can go to Kitchener-Waterloo, Hamilton, Guelph, all those markets. And the second part is for investment pro or student rentals. We want to be near universities. Like if you buy a student rental 30 minutes away from your university, that's not going to work, right? So we need to be within proximity. And if you are working with one of us, we work in Kitchener-Waterloo, Hamilton, and Guelph, and our team has been to all those universities. So we have people who've gone to all those universities, right? So
Mhm.
we know the neighborhoods in and out.
Yeah.
And in certain cities like Hamilton, you need to be on the right street.
Yes. And
Yeah.
student rentals is becoming even more popular, especially in
Yeah.
this market. If you're interested, and again, you can reach out to us. We are going to be setting up property tours once the weather is
Yes.
a little nicer.
Yeah.
And we can show you different types of investment properties and different neighborhoods and just educate you on what to look for as you're heading into this exciting journey.
Yeah. So, Melody, it's 8:02. Okay, we've taken 2 minutes of people's time.
We are done. Thank you so much for
Yeah.
joining us.
Yeah.
And, you know, there's our contact information, but if there's, a few things we want to leave you with is please do reach out to us if maybe you're overwhelmed or maybe you just want some clarity on what direction to go. Like I said, we do offer vision meetings where it's very holistic, the approach that we take. It's not just about your finances, it's about where are you heading and how do we make sure we put the right plan in place. So we'll review your budget, your plan, your systems, everything else. And finally, Jocelyn, anything else you want to add there before?
And I just wanted to say that we're open to have a conversation at any stage you are at. Because some people will think, oh, I don't think I'm ready for that stage. Truth be told, that sometimes you don't really know until you speak to a professional. So if you are here, I'm thinking you're an individual who likes to invest in yourself, invest in your future. I'm happy to sit down, give an hour of my time just to see where I can help. So Melody and I are happy to do that. And it doesn't matter what stage of life you are in, we're happy to connect and see how we can add value to your life.
And as we mentioned earlier, Annie, if you can go to the last slide, we do run a real estate team. I think there was a team slide there. I just wanted to quickly touch on
Yeah.
that. So you're supported by an entire team, not just
Yeah.
Jocelyn and I. And at the Hive, we really are building community. And that's why everything we do comes with a community lens. There are some more of our team members. And so it really is about collaboration and building that community and seeing how we can help you out, even if it means not buying an investment property. We want to make sure that we're showing up for you and that you have a community you can plug into that you can trust.
Absolutely.
All right, everyone.
Okay,
Thank
so
you so
thank you,
much. This was so much
everyone.
fun.
Yeah, thank you so much for coming at 8:04. We really appreciate your time, and I hope you have a wonderful evening.
Bye,
Bye.
everyone.
Good night. Thank you.
Good night.
Thank you, Annie.